Hello, my name is Johnny Perez, and I'm an accounting manager here at Valley of the Sun United Way. I'm going to take you through Family Eligibility Determination updates for state fiscal year 2019 for Quality First scholarships. The purpose of this training is to provide information on changes that will be implemented for QF scholarships beginning with the new fiscal year, July 1, 2018. Changes include a definition for ineligible children, updates to the type of self-employment documentation that we will accept for family qualification, and then the elimination of personal statements as an option for family qualification. So I'll go ahead and take you through what all of these changes mean. And then finally, in order to accommodate these changes, modifications have been made to the online Family Qualification Tool. So I will also show you how that will work in fiscal year 19. So the first change that I mentioned was this addition of ineligible children. In state fiscal year 2019, a child cannot receive a Quality First scholarship at a participant where their parent or guardian is an owner of the participant, the CEO or other equivalent title of the participant, or a member or manager of an LLC that is the participant. Really important with this change is that you understand that children of employees of participants, excluding the CEO or other equivalent title, are still eligible for Quality First scholarships. So if you are an owner of a child care center, your employees are still eligible for scholarships. It's just you as the owner could not enroll your own child. However, should you have questions about who falls under this rule, you can always reach out to Valley of the Sun United Way and we can help you with any qualification questions. The second change for state fiscal year 2019 is that documentation of self-employment must include a tax form 1040 with applicable forms such as a 1099, Schedule C, CEZ, E, F, or K, and weekly or monthly ledgers verifying gross income, receipts for business income, and expenses for the most recent 3 months. In the current fiscal year, self-employed families are able to qualify just using a signed profit and loss statement. However, in state fiscal year 19, signed profit and loss statements will no longer be accepted without other supporting documentation, and that supporting documentation would need to be weekly or monthly ledgers verifying gross income, receipts for business income, and expenses for the most recent 3 months. So if your families have had a requirement to file taxes, they should be submitting their 1040 with these weekly or monthly ledgers. If they have not had a requirement to file taxes, they'll need to submit a profit and loss statement and then again these weekly or monthly ledgers. Should you have questions qualifying self-employed families, we always encourage you to reach out to Valley of the Sun United Way. One of our fiscal monitoring specialists would be happy to work with you on enrolling any self-employed families. The next change for fiscal year 19 is that families will no longer be able to submit personal statements as part of their application for Quality First scholarships. In the current fiscal year, a family would submit a personal statement if they were unemployed and did not have any income, or if they need to make modifications to their household size documentation. However, in state fiscal year 2019, these statements will no longer be allowed. For your families that are not receiving any earned income, the acceptable alternative income documentation to a personal statement would be the no income declaration form, and it is mandatory for all contributing members with no earned income. You can find this form on the Policies and Procedures tab of the reporting portal, and essentially it will replace any unemployment personal statements. Instead of writing a personal statement explaining that they're a stay-at-home parent, full-time student, or not currently employed, what they will do is submit this no income declaration form with their application. If any of these unemployed contributing members have unearned income, such as financial aid from school, unemployment and insurance, Social Security benefits, anything like that, we will still take that documentation and it will still count towards the family gross income, but they will also need to fill out this no income declaration form, and it is available on the Policies and Procedures tab in the reporting portal. The second reason why a family would write a personal statement in this current fiscal year is to modify their household size documentation. So in state fiscal year 2019, we will no longer allow personal statements for household size. If your parents do not have a Tax Form 1040 or a current public assistance letter, what they can do is submit one of these alternative household size document options. For siblings not claimed on taxes or public assistance, the parents are able to submit their birth certificate as verification that they do in fact live in the home. With these birth certificates, they do not need to be the same state-issued ones that you need to prove legal residency. If it's a new baby or something like that, you can just submit their hospital birth certificate, and we will take that to verify that they are an addition to the household. If you have parents who were not married last year when they filed taxes but are now married, they can submit their marriage certificate. On the flip side of that, if you have parents that filed jointly last year and are now separated, we would take their divorce paperwork or any custody agreements that they've come to via mediation to verify that the child lives in one home over the other. Additionally, if families have adopted or foster care children that they did not claim on taxes, we would take any paperwork from the state verifying that this adopted or foster care child has been placed in the family's home. And then any other additions would only be allowed with approval from Valley of the Sun United Way. So if you have families that cannot provide you with one of these options, we recommend that you reach out to us and we can see what we can do about getting these families qualified. So because of all of these changes, as I mentioned, updates have been made to the functionality of the Family Qualification Tool. We're hoping that via these changes, qualification will be a little bit easier and that the functionality is improved for everyone. Changes include the ability to duplicate child records for children continuing between fiscal years. So some of their information that we know won't be changing, like their name and date of birth, will pull forward, and then you will just need to re-enter family size info as well as income information. We've also added the addition of the scholarship award field within the Family Qualification Tool. So now you will assign a child either a part-time or full-time scholarship while in their Family Qualification Tool record. We've condensed the relationship to child selections when you're adding household members to the Family Qualification Tool. The current list has about 23 options. This has been condensed down to closer to 10. We've updated income types, and then we've removed all hourly rate entry fields. All income in state fiscal year 2019 will be entered as a flat dollar amount. So the first change that I mentioned is that you will now be able to duplicate child records for children continuing on the scholarships program between fiscal years. So when you look at your Family Qualification tab, you'll see all of your children that are currently attached to reports. There's a new icon available under Actions that looks like two pieces of paper. If you select that icon, it will create a duplicate record of this same child, and information including their name, date of birth, and enrollment date will be pulled forward. So when you re-enter the record to edit it, all you will need to do at that point is add their family members and add any income information. The next change that we made to the tool is the addition of the scholarship award field. In state fiscal year 2019, you must select a child's scholarship award, part-time or full-time, within the child's Family Qualification Tool record, and this selection should correspond to the child's enrollment packet. Really important, once you've made a selection, it cannot be changed without mutual consent from the family and approval from Valley of the Sun United Way and FTF. So as you're qualifying kids, please pay attention to the scholarship award selection that you're making, because you cannot change it without approval from the family and Valley of the Sun United Way, and we will only allow one change per fiscal year. The next change made to the Family Qualification Tool is updates to the relationship to child selections. They've been condensed down to these following options. With this list of options, the most important one is the one at the bottom where it says temporary guardian doesn't claim child on taxes or public assistance. This would be a rare scenario where you have a temporary guardian who doesn't claim the child on taxes applying for a scholarship. If you have anybody that you feel falls under this category, please reach out to Valley of the Sun United Way and we can assist you with their family qualification. Finally, in state fiscal year 2019, income types have been updated to the following selections: pay stubs, public assistance, self-employment, employer letter, and no earned income. Currently, the income types are listed as salary, hourly, and public assistance. We've updated to these 5 selections so that it corresponds to the documentation that you should be collecting. And then as you make selections in the tool, different pop-ups will appear that give you tips and reminders about the income information that you're entering. Also, all income will be entered as a dollar amount. There will be no hourly rate entry required for state fiscal year 19. So now that I've gone over all of the changes for state fiscal year 19, I will show you how to use the new Family Qualification Tool. Our first example scenario is a 2-parent household with 3 children. This family has provided you with a complete public assistance letter dated within the last 12 months, and all family members are included. The total monthly gross income on the letter is $1,850. So when I enter my Family Qualification tab, you'll see that any children that have been qualified for this fiscal year are listed under Children Attached to Reports. If we say that this scenario applies to one of our children continuing between fiscal years, what I can do is copy his current record. And you'll see when I click the paper icon, a pop-up appears asking if you wish to duplicate this child record. And I'll just select OK. When I do that, a new record for James appears here in pink, and they've qualified him as of July. So we just defaulted to July because that's the first month of the new fiscal year. However, when you actually enter the record, you can update it to whatever report time period this child will actually start. You'll see their first date attended, name, birth date, all pull forward, as well as zip code, documented special need, and family contact number. However, with these fields, you are able to make changes if you need to, but you cannot edit their name, date of birth, or first date attended. The first new field in the tool that you'll see is for scholarship award. If you hover over this question mark, it will let you know that you need to select the type of scholarship you have awarded the child, part-time or full-time, and that your selection should correspond to the family signed enrollment packet. I'll go ahead and assign James a full-time scholarship, and then I can begin adding the family members. As I mentioned, this is a 2-parent household, and mom and dad are Tracy and John. I'll go ahead and label them both as parents, biological or adoptive, or step-parents related by marriage. You'll see that when I make those selections, it will prompt for their income. So if I scroll to the right, I will select an income type of public assistance because they provided us with their public assistance letter. When I make the selection, a pop-up appears letting me know that a complete public assistance letter will include a total monthly gross income for the entire family. In a 2-parent household, which is what we have here, this amount only needs to be listed under one parent. And I'll just go ahead and acknowledge that I understand. And then as I mentioned, the amount on the letter is $1,850. I'll make the same selection of public assistance for John and get that same pop-up. However, since as the pop-up mentioned, I only need to list the monthly income under one parent, I'll go ahead and leave his income as 0. When I scroll back to the left, I can add James's siblings. And they are both siblings, biological or adoptive, or step-siblings related by marriage that do not claim James on taxes. You'll see when I make those selections, they are not prompted for income. However, these boxes appear, and based on these options is how I will get these two to count in the household size. As I mentioned, the family provided a complete public assistance letter with everyone listed, so I will just go ahead and check the box that says dependent listed on taxes / public assistance letter. When I scroll down to the bottom, I'll see that based on their household size of 5 and their total annual income of $22,200, James will meet qualifications. The final thing I need to do is check this qualification verification checkbox, And it's just saying that by checking this box, I acknowledge that anything that I've provided on this form is true and accurate to the best of my knowledge, and that while the tool will qualify families based upon the information I've entered, and that per my participant agreement, my scholarship files are subject to review by VSUW or FTF at any time. So I'll just hit Update Child Details, and you'll see that James now appears qualified for July 2018. Our next scenario is a single-parent household with 2 children. The parent provided you with their tax return, but not all children are included. The parent has also provided you with pay stubs, and she receives a biweekly salary of $890. So if I go back to the tool, we can say that this scenario applies to Kimberly, so I'll just go ahead and duplicate her. And she also appears here now in pink, so I'll just click on this pencil and paper to edit her information. As I mentioned, first date attended, name, date of birth, zip code, special need, and family contact number all pull forward. I can edit some of these fields if I need to, but I do not have to. First, I'll assign her a scholarship award, and then I can begin adding her family members. Jackie is mom, and she is a parent, biological or adoptive, or step-parent related by marriage. Her income type that she provided is pay stubs. And another box will appear letting me know that families are qualified based on their gross annual income. When reviewing pay stubs, the only pay descriptions not considered countable income are overtime, bonuses, and per diem, so I'll just acknowledge that I understand. And then if you hover over this question mark over pay frequency, it will remind you that most pay schedules will break down as follows. Weekly are 5 to 7 days, biweekly it would be 12 to 14, twice a month is 15 to 16 days, and monthly is a 28 to 31 day pay period. So that's just a helpful reminder as you're looking at pay stubs. I know that mom is paid biweekly, so when I make that selection, 2 boxes appear, and her biweekly salary is $890. As I mentioned earlier, mom is a single parent with 2 children, so I'll go ahead and add the second child. Kimberly's brother's name is Michael, and he is a sibling, biological or adoptive, or step-sibling that does not claim Kimberly on taxes, so I'll make the selection. And these same boxes from before will appear. As I mentioned, Michael was not listed on Jackie's tax return. However, what Jackie has done is provided us with a copy of his birth certificate proving that she, the head of household, is a biological or adoptive parent. When I check that box, you'll see that their household size updates to 3, and based on that household size of 3 and their total income of $23,140, Kimberly meets qualifications. I'll check the qualification verification checkbox and update child details. Our final scenario is a single grandparent household with 1 child. The grandparent has provided you with the tax return and the child is listed. However, the grandparent does not receive any income from employment. She does receive $2,000 monthly in Social Security income. So I'll go ahead and say that this is a new child for the next fiscal year. You'll see that the tool still defaults to this current fiscal year of FY 2018. However, when I change the drop-down to July, the first month of the new fiscal year, this updates to FY 2019. As you're adding kids for this current fiscal year and next fiscal year, please just pay attention that this updates so that you know you're working in the correct form. I'll begin adding this child's information. Since this is for next fiscal year, I don't necessarily know their first date attended, so I can leave this blank and it will still allow me to save. So this child's name is Ariel Reyes, and based on her date of birth, zip code, and phone number, everything's acceptable. I'll go ahead and assign her a scholarship type and then begin adding her family members. As I mentioned, this is a single grandparent household with just the one child. Gracie is grandma, and she is an additional family member that claims the child on taxes or public assistance. You'll see based on that status of claiming Ariel on taxes, she is prompted for income. However, as I mentioned on the slide, she does not receive any earned income from employment, so I'll just go ahead and make that selection. And the Family Qualification Tool reminds me that contributing members with no earned income must complete the No Income Declaration form. Documentation of any unearned income, like Social Security, must still be collected. I'll just acknowledge that I understand. And you'll see that her income frequency defaults to monthly, and it just locks at 0 because we said that she has no earned income. However, I can add her Social Security income over here in this unearned income section. I will label it as Other, Monthly, and then the amount of $2,000. I'll scroll back to the left. And you'll see that based on their total household size of 2 and their income of $24,000, Ariel will meet qualifications. I'll check this verification again and just acknowledge that I understand and save child details. And you'll see that anybody that we've added to the tool is all qualified and ready to go for this new state fiscal year beginning in July 2018. This concludes the presentation on Family Eligibility Determination updates for state fiscal year 2019. The slide here has all of our contact information, so as you are qualifying families for this new fiscal year, please feel free to reach out to us at Valley of the Sun United Way, and we'll be happy to assist you in any way that we can. Thank you for listening to the presentation and hope to hear from you soon. Bye.